Welcome to Beyond the Audit podcast, the podcast where we go beyond the numbers to explore the latest developments and trends in the finance world. I'm your host, Luphumlo Xhala. In this final episode of our series on the third edition of IFRS for SMEs Accounting Standard, we'll be wrapping up our discussion with Karolina Martin, IFRS Director at Forvis Mazars. We have covered the reasons behind its updates and explored some of the key changes in the previous episodes, but today we'll dive deeper into the control, financial instruments, as well as the revenue updates that preparers and reviewers need to know about. We'll also talk about the tools available to make the transition to this new edition smoother. Karolina, welcome back to the Beyond the Audit podcast.
Thanks for having me again.
So, Karolina, we'll be continuing our discussion as we had in the previous episodes, and we'll be having additional questions just to make sure that people understand more about the changes in the IFRS for SMEs. So, what are the big changes that preparers of SME financials need to know in respect of Section 9 of the Consolidated and Separate Financial Statements?
Yeah, so that's quite an interesting one. So what the ISB has done is they've actually aligned the definition of control with IFRS 10, now in IFRS for SME. So there's a lot more guidance that's been provided in actually applying a control definition, which all IFRS preparers are aware of. But what has been retained and further clarified is the rebuttable presumption, whereas an entity holds a majority voting rights, that control is assumed, and then you'd automatically consolidate. Oh yes, and the other item is also there was no guidance in terms of when you had loss of control of a subsidiary. That has now been brought in from IFRS. So it's basically your recognition and measurement and what is required in terms of disclosure.
Okay, so essentially they just basically try to apply the requirements of IFRS 10 basically to the SME, but try to keep it simple to ensure that it doesn't overcomplicate things.
Yeah, that is exactly that. And that is what is the purpose of SME. It is a simplification of IFRS. And it's also cost versus benefit, because example, when we look at expected credit losses, that is quite a complex process to do.
In our initial episode, you mentioned that IFRS Section 12 and Section 11 will be consolidated into one standard. So now what has become of Section 12 of the standard basically?
So basically, what the ISB has done now is they've made Section 12 a fair value measurement section. So very similar to what we have in IFRS in terms of IFRS 13, so your fair value measurements. So in that standard, it's housing all your fair value disclosures, measurement, guidance in terms of what is required in explaining to your users how fair value is accounted for.
And then as a follow-up question, basically, so what should an SME consider now with Section 12 fair value measurement coming into play?
So Section 12 basically requires additional disclosures, but it is limited to what is in IFRS 13. So those disclosures would include your fair value hierarchy, inputs and techniques that have been applied, but what is also a simplification is that your sensitivity analysis on your inputs are not required. So it's basically also aligning to IFRS 13, but with limitation and simplification.
Thank you so much for that. And then let's chat about the significant changes in financial instrument sections. What are the main things that preparers and reviewers need to be aware of when it comes to financial instruments?
In the spirit of alignment, the good news is that SMEs do not have to do expected credit loss model. So the incurred loss model has been retained. Additional guidance has been provided in terms of classifying your financial instruments, and the only requirement is an age analysis. Because we are retaining the incurred loss model, so the ISB requests preparers now just to provide a general age analysis of all their financial instruments.
In the first episode, you mentioned that the section has been revised to align more with IFRS 15, revenue from contracts with customers. Why has ISB amended this section?
This is the biggest amendment or revision that we have in this new framework. The reason why the ISB has done that is also in the spirit of alignment, but they feel that the IFRS 15 requirements that is now also brought into the Section 23 is providing more transparent and more user-friendly information. So it has been aligned. This is the majority change that we have, but obviously it does afford also simplifications.
Okay, that's interesting. And then as a follow-up question, basically, what would you say are the key changes that preparers and reviewers should be aware of regarding Section 23?
So definitely application of a 5-step model that IFRS 15 refers to. There is a few more clarifications in terms of how to treat contract assets, liabilities, as well as if there is a right of return. So that guidance has now been brought in. What else should be aware for IFRS 15? Variable consideration, etc., but obviously with simplification. But also users or preparers rather will just have to start looking at how they're going to look at their promises or their goods and services to align with IFRS 15. So there is a lot more guidance in it. So preparers must just be aware and then seek help if they do need assistance with it.
In our conversation, you've mentioned that there seems like to be a lot of changes that users and preparers should be aware of. So now, can you talk us through the tools that are available to make the transition to the third edition to be smoother?
What is great is that the ISB has a lot of tools or information post the project. So if you go onto the ISB's website and to the SME section, they will have an executive summary, a project summary, etc. So a person can go through and look through all of that. What also the ISB has, they have educational modules. So basically it's more application guidance, which they are currently updating. So for section 2 and 7 have been updated, and they anticipate to finalize the relative modules by the end of next year. And from our perspective, we have done an article and are also looking at more guidance in terms of issuing to the firm. But yeah, just stay tuned, and if there's anything you need, just shout.
Thank you so much, Karolina. This brings us to the end of our episodes. We'll look forward to seeing the changes.
Thank you. It's been great. Thank you.
As we conclude this series on the third edition of IFRS for SMEs Accounting Standards, I want to thank Karolina for her valuable insights. We have covered the key changes and the tools to help the transition to the new framework. Thank you for joining us on Beyond the Audit podcast.